Greetings. Welcome to my weekend market recap, 23rd July 2022. I'm Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website superiorprofit.co, Twitter handle Superior Profit, and YouTube channel Trading Profitably. These are all open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. I use Q Systems for my trading. It runs on Metastock and TradeStation platforms. The technical analysis part runs on TradeStation, and technical fundamental industry analysis, everything runs on the Metastock platform. That was the last slide. Let's start with the live systems. First, a look at the global markets. Australian index, all ordinaries. After displaying the bullish headwind, all ordinaries was followed by multiple bullish flow. There is a technique to buy at low risk point, that is to buy at the first bullish flow after the bullish headwind. If you followed that, you could buy at this point, and as price came to the upper boundary level, you covered more than the risk distance and partial profit could be booked. In this case, would you book full profit or partial profit? Personally, I would book full profit in this case because the weekly is right at the trendline resistance. If price comes down next week, then you may look for low risk shorting opportunities in individual stocks. Japan's Topix Index. Topix Index displayed the bullish flow candle at this point. Price was already having higher low, higher high. Weekly already had bullish flow. Therefore, bullish backdrop. Weekly had bullish backdrop. Therefore, when we had bullish flow in the daily chart that confirmed a flow trend following long setup, I favor buying individual stocks, not the index. So on this day, I could buy individual stocks, and as the index hit the upper boundary, you could book profit in them. I will not buy now because it is near both daily and weekly trendline resistances. If price can go to the trendline resistance and reverses, then I may look for low risk shorting opportunities. Too late to buy, same situation like in Australian market. Preferred trading direction is short for both of them. What about China market? CSI 300. Isn't it nice? Right here, I suggested not buying. Right on this day, actually on this day, I conducted the weekly market recap. I mentioned specifically, no ifs and buts, that my preferred trading direction was shorting, and then price nicely came down. Prior to that, when weekly had bullish headwind and backdrop color turned cyan, I was bullish from that time onward. So bullish here, bearish here, both were very accurate analysis and profitable analysis. Now what is my view on China market? It has a trend line support If that support is broken, then I will not mind shorting. That will be a breakout short setup in daily, and in this case the stop will be nearby. I'm not going to short CSI 300. I will prefer shorting individual fundamentally weak stocks, and I will not mind doing that if CSI 300 breaks below the support. The weekly is also looking weak. On the other hand, if price bounces up from the trendline support, I'll again not mind looking for buy setups. So in this case, I am okay to buy in either direction depending on whether the trendline support holds or it breaks. CSI 300 is showing a very different picture from Topix and All Ordinaries, Australia. CSI 300 pulled back last couple of weeks, whereas Topix and All Ordinaries went up. What about FTSE index, UK market? It's continuing to be inside a range, right in the middle of the range, and we have three indecisive candles in a row. I'm not going to trade in the FTSE market as far as swing trading is concerned. It's in a no trading area. And India's Nifty 50, this is looking the most bullish among the markets we saw so far. The weekly backdrop is bullish, shape is very bullish, daily is also steadily going up. It is bullish, but is it the time to buy now? No, it is already above the upper boundary. The stretch indicator that shows overbought condition is already overbought for 5 days. So for the entire week it is overbought. When was the optimal buying point? That was, if you remember the Australian market, a similar analysis when price was having higher low and higher high, when the backdrop color was already cyan, and then we had a bullish flow. That would be the time to buy using the flow trend following long setup. And if you do that, those trades have already hit the profit target. You would be out of those trades. In this case, you might not exit the full position because the next trend line resistance in daily and weekly are far away. You could book at least partial profit. And you may keep an eye on this watermark resistance. If you see prices reversing from the watermark resistance, creating a double top, then you may exit the remaining position. Or you could apply trailing stop in the remaining position. However, partial position, all Q traders would exit because Q trading philosophy has some mathematical basis, and once that mathematical basis is achieved, we like to book at least partial profit. We don't want to deviate from the mathematics. That's why whenever the reward exceeds the risk, we like to book partial profit. The global markets are showing a mixed picture. India is bullish but too late to buy. Australia, Japan near resistance. I will prefer to short if they reverse from the resistance levels. China market, I may go either way, long or short, depending on whether the trend line in daily holds or breaks. And UK market is very indecisive. I will stand aside. If that is the state of the individual markets, how is the global custom index? Global custom index was also showing higher low, higher high, and then we had a bullish flow candle that was a trend following long setup. So in global markets, we could buy right on this candle and then price has gone up. Friday's candle shape is indecisive and it is too close to the upper boundary as well as the flat white direction line. I will not like to buy now. I will not like to short also in this global index as a whole. Of course, we cannot trade it. It's a representation of the global market as a whole that is showing indecision. And if you look at the relative performance, you see that though earlier it was outperforming the USA market, now it is equal performing. Now let's look at the USA market, and I like to start with something interesting. I don't have pre-decided format for these sessions. So let's look at something interesting. Let's drop the 4 market ETFs SPY, QQQ, DIA, IWM into QFinder in QLE on TradeStation. This can calculate trade signals and setups in real time. These are the 4 market ETFs. Few things we see. All of them are down on Friday, and 2 of them, DIA and IWM, actually had a gap up open. All of them initially started to go up but then reverse. That is a bearish false move, luring people in to the bullish side and then reversing. That's indicated by a false move, varying percentages. All of them displayed a bear release signal. What does it mean? That means all of them were overbought in terms of the stretch indicator, and now that overbought condition went away, so the bulls stood aside. That's indicated by a bear release signal. And this is a signal I wanted to point to, the red candle high, green candle low. This can be one of two things, either a bearish candle at the top or a bullish candle at the bottom. Red candle high is bearish candle at the top, at the high. And all of them, all the 4 market ETFs displayed red candle high on the same day. And one gentleman mentioned to me, these signals, by the way, are not part of Q core trading system. I don't sell these signals or setups. This addendum is provided to people who are aware of the indicators free of charge if they also have Q systems. Now, because they are not developed by me, I needed some time to understand how they work. And I remember one gentleman mentioned to me that RCL, RCH, GCL, red candle high, green candle low, may not be so useful if one or few stocks are displaying these signals. But on a day, if you see many of them are showing, for example, red candle high, then you may take it more seriously. And I keep an eye on these market ETFs during market hours, and I noticed this on Friday itself. Red candle high in all the market ETFs, that's a bearish signal at the market level. Now let's look at SPY chart. S&P 500 ETF, and you will see on Friday it displayed red candle high. By the way, if I go to my website and also Twitter, if you go through my tweets, you will see on Thursday, not on Friday, but on Thursday I tweeted that I exited most of my long positions on Thursday itself, not on Friday. This was the tweet. And I will tie it back to the live analysis I am doing, and you will see with the powerful Q systems and techniques, I was able to buy at the bottom and exit at the very high. Of course, we don't know what next will bring, but so far it looks like I could exit at the high. This was a tweet at 1 p.m. on Thursday. SPY, QQQ, IWM are all above their weekly expected moves in Q Elite. These expected moves are calculated based on option pricing. When the market ETFs are above the upper expected move, that is considered overbought, and it may pull back inside the range, inside the upper limit and lower limit. And like many other Q signals, this signal is also even more useful when many similar instruments display the same signal. And in this case, 3 of the 4 market ETFs were above the upper limit. So there was a chance of price pulling back. Now what did I do? I bought my swing long trades over last 10 days, 10 plus days. And by today I closed most of them. So I was ahead of others in buying stocks. When did I buy? If you followed my weekly roundups regularly, you would know that I was bullish at this point, and though there was a pullback here for the first 3 days of the week, I did not turn bearish. All my posts since this point in the market had been bullish, and those trades never hit the stop. Some of them I exited with significant profit, maybe 15% plus. Some I exited at 3.54% profit, like that, and some I might have taken small losses as well. Overall, the number of stocks that I accumulated starting from this point and that I exited mostly on Thursday and applied trailing stop on the remaining ones, I exited all of them by Friday. Overall, this area gave me a significant profit, percentage profit of my equity. Why I wanted to mention that, if you follow any other system, probably you would not buy at the bottom like I did. And many other people publicly mentioned they were not buying, and that is also okay. Not buying is not bad, your money is safe. But I put my money at work using reliable Q trade setups, using a robust methodology, and I came out with some profit, and I exited right at the top on Thursday, most of my positions, and some at the in the morning session on Friday. And as of Friday's close, I have some short positions. See, again, I started sharing bullish ideas from here, and my first short idea since then was right on Friday. I'll go through that trade and maybe a few more trades that is on the short side as of Friday's close. Now, if I go back to SPY chart, that was IWM. In SPY terms, I was bullish at this point. Though there was a pullback, I did not turn bearish. I exited most of my positions on Thursday, not on Friday, and remaining positions on Friday. And on Friday, we have a red candle high that we can see if we use the 3 chart template where we have the alternate momentum signals also. This is the red candle high in SPY. Also, I see that in the Q daily chart, price pulled back below the yellow direction line. It tried to go above the yellow direction line and pull back, displayed a bear release signal. There is no Q short setup because the weekly color is still bullish. There is no short setup in SPY, but individual stocks, weak fundamental stocks, have very low risk short setups. I shorted some of them, and some of the ones I didn't short also I will share. So this is the point I would like to start shorting. This is SPY. Okay, let's now look at the other market ETFs. Let me switch to QLE on TradeStation for that. After SPY, QQQ, you can see here QQQ is still holding above the yellow direction line in daily entry chart. So if I was going to short any of the market ETFs, at least any of these two, SPY QQQ, I would prefer SPY, not QQQ. That is how we look at the overall picture and also look at the individual signals and then come to a firm decision. Not this may be like this, that may be like that, not like that. A firm conclusion that if I had to short one of the two ETFs, SPY, QQQ, it will be SPY. And QQQ here is also displaying the red candle high. What is red candle high? It's a signal that tells that at the very high point, suddenly the instrument turned bearish, and because it is at the very high point, that means price must have gone up for a while. And we can see Q indicator showed that it was overbought, and now it is showing bearish stretch. So all of them usually come together. What about DIA? Also a red candle high day on Friday. Here also price closed above the yellow direction line. We have a bear release. The weekly shape is indecisive, color is still bullish. So still we have SPY as the best shorting candidate among the three. What about IWM? IWM is also above the yellow direction line. Weekly is bullish in color, indecisive in shape. We have the red candle high. So as far as the market ETFs are concerned, there is no short setup. However, it is showing that market was overextended, overbought, and now a bear release signal came up, and then we have some more bearish signal because all the market ETFs has red candle high. And when I noticed these red candle highs, I used Finder to find trades in stocks that are having red candle high. See how I am looking at the market and then deciding what to trade. That will give me even more higher probability trades. Remember some time ago I mentioned a stock 3M. Let's look at that. It's always good to look back and see how the live analysis that I did before knowing the results played out and why these are related. The red candle high trade that I tried to find this week, how that is related to the 3M trade that I shared earlier. They are related because in both cases I didn't identify the trades using usual workflows. In case of 3M, I saw many stocks at that time were displaying bullish indecision at the low. So there is a scan in Q Global, where you can look for bullish indecisions at the low. That is how I found 3M, and then I looked at the 3 interval chart, monthly, weekly, daily, and I noticed this very long term. If I remember correctly, it was coming from about 10 years back. Was it? Let's make sure I'm not making any mistake. Yes, from 2021, so more than 10 years back. So I found it based on bullish indecision at the low. Why did I run that scan? Because I saw multiple instruments were showing that. That's why I ran that scan. I happened to find 3M that was at a very long-term support, and right at this point, I remember this was the day, a down day. That was the Friday when I had the market roundup. I mentioned that if you look at this weekly trend line, sorry, monthly long-term trend line support, if you look at weekly, daily decision, you wanted to buy 3M, you could buy, as I would have done. I did actually. You could have short the put, or if you didn't want to risk holding the stock, then you could do short put vertical. See how perfect analysis was that. price never went below the previous low. Why I know that? I know that because we have a trend line support. Trend line support means higher low. So price did not breach the previous low. My stop would be someplace below the previous low. But will I get stopped out with a short put or short put vertical? No. That is why I selected the trade direction and also selected the instrument in a low risk way. I selected short put vertical or short put. So even if the low was breached, I was not going to get stopped out. Anyway, the previous low did not breach. It made a higher low here and went up. And by Friday's close, you had significant profit in the trade in terms of percentage. And as is Q guidelines, you could book at least partial profit. Looking at the weekly trendline resistance, you might consider booking full profit as well. But at least partial profit you would have surely booked, and I have done the same. At least partial profit I have booked. Why this is relevant? See how I am doing the analysis and sharing the results, sharing the trades before knowing the results. That was the time I ran the scan for bullish indecision at the low. And now when I am seeing all the market ETFs are showing red candle low, sorry, not red candle low, red candle high, again SPY, DIA, IWM, QQQ. When all of them are showing red candle high, I am looking for trades in similar stocks. Another characteristics you might have noted when I was doing the analysis, several of these market ETFs are about to close below the yellow direction line. And one of them are below the yellow direction line, that is SPY. When that is the nature of the market as a whole, I could try to look for a short setup that has red candle high and that is at or near the yellow direction line. And you could easily look for such trades using Q Finder. I'll come to that, but before that, let's see why I could turn bullish here and I could book my stops right at stock, book profit in all the long stocks right on Thursday, Friday, and why I turned bearish on Friday. Thursday I sold most, Friday morning I sold the rest long positions, and Friday afternoon I took some shorts. Why? That answer is in the Q market breadth analysis. And I will not go through the detail probably, and after saying that I may go into detail again. But in any case, the previous market roundup videos are there. Sometimes it is useful to look back on the market roundup here, on the market roundup here, and see how my preferred trading direction was changing. I remember I went bullish at this point, and here, this was Friday, I think. Though it was little bit down, I mentioned, this is what I mentioned explicitly, that I was not going to turn bearish on the very next day after an Eureka day. That was a bullish momentum day on the market as a whole, as seen on market breadth total view calculated from two composites and four major indices. So I remained bullish all along. Then here I saw again an Eureka day with very strong bullish momentum for accumulation count. So there was very deep and broad buying across the market. And see how I analyze the market. Very next day, it had a sharp pullback. And many people, if you see their commentary, they were turning bearish. What happened the very next day? Apparently, because of Apple disclosing that it was going to reduce some headcounts, Apple started pulling back and market also fell down heavily. Well, Apple is not the only company that is reducing headcount. Facebook Meta has declared that, many other companies have declared that, and Apple is no doubt a mega cap stock, but just because of that, that one company announcing they will reduce headcount, which was a known fact anyway, I was not going to turn bearish right after a 4 accumulation count day. That helped me to continue to buy, in fact, if I had a chance. And very next day I had an even more bullish momentum day, 6 accumulation count. Now these accumulation counts of 4 and 6 are not because of small traders buying. It is not possible to have such accumulation counts because of them. So I turned bullish here, continued to remain bullish at the top, first swing high, continued to remain bullish until Thursday, and on Thursday I saw that market was becoming overbought. How so? I shared one tweet. I showed the tweet earlier that the market ETFs, 3 of the 4 were above upper expected move, and we'll see shortly the bucket analysis was also at an overbought level. And the other thing was the Q guiding principle, that if the reward is covering the risk, book at least partial profit, and market was getting overbought, so I booked most of the long positions on Thursday. Friday I closed the remaining. That was decided based on the market breadth real-time chart on QElite, among other things, and of course using QEdge. This is the market breadth of Nasdaq and NYSE as a whole. We can see the early range high and early range low pivot levels form in QQQ and SPY respectively. The same was true for the futures, E-mini futures, NQ and ES. It tried to go up in the beginning, and these are 10-minute interval charts, tried to go up in the beginning and then sharply fell down, and that is what showed up as false move in Q Finder. I earlier showed the false move, tried to go up and then came down, and then it broke decisively below the early range low at these points, and you could see that though advanced decline started at a very high level, 1500 in NYSE. Nasdaq was not so strong, about 500, but both were positive. NYSE was very positive, NYSE. And then quickly they turned negative and remained negative throughout the day. The other telltale sign was from up down volume that was steadily going down for Nasdaq and NYSE both throughout the day. So when I looked at that, I had significant overall profit. I didn't want to risk it. I closed the long positions, and when these declines were happening, not only in the external view, that is the candle chart, but the internal views here, I decided to look at other signals. So I drilled down from the exchanges to the 4 major indices: Russell 2000, Dow Jones Industrials, Nasdaq 100, S&P 500, and we could see a similar pattern. The opening was bullish, but it reversed both in terms of advanced declines here, and up down volume was steadily going down. So it was not only true for NYSE and Nasdaq exchanges, but about all the major indices as well. And then I looked at the QEdge that shows another breadth inside, that is the sector industry stock advanced decline breadth. This also started bullishly, and then in real time it was turning more and more red. So all the things were coming together. Market was overbought, then it started to decline, not only the external view but internal view, advanced decline, up down volume, and even sector industry stock across the board, they started to go down. And I noticed the red candle highs in all the market ETFs, so I started looking for shorting ideas and I did short some. Now what happened at the close of the day? Let's go back to the USA market dress total view. We have a magenta candle. Remember when we saw the cyan candle, the Eureka day, I mentioned that very next day I was not going to turn bearish because of a small drop. But now I have a magenta candle and that has come at a swing high. So let's look back and see where else we had magenta candle at a swing high. Here, you may say here, 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 you may say here, here, here. Every time we have a magenta candle and that is a phoenix signal, that is opposite to the cyan candle, opposite to Eureka signal, it's a Phoenix signal. That's a heavy bearish momentum in terms of market breadth. Not something calculated based on external view, but these are based on how the market is performing inside, like checking the market with a stethoscope and other medical instruments. So we see, looking back, every time we have a phoenix at the swing high, market tends to pull back and we have a phoenix signal there. Now this market breadth is calculated after market close, so you can see how I could use the intraday breadth insights from Q Elite and from Q Edge to exit remaining long positions, take short, and it seems at the close the phoenix is confirming my bearish view. Why I did not mind shorting? See, I am at a swing high. So if I am proven wrong, my stop is very narrow and giving me a low risk trade, and that is a constant in all my trades. So I did not hesitate to take some short trades. The phoenix signal is also looking now bearish. I'll not go through all the other breadth insights here, but let's look at what is more bearish. Growth versus value, it is tilting down. So growth is underperforming. Small cap versus large cap, tilting down. So small cap is underperforming. That is not good for growth stock investors like CanSlim investors or even HSI like investors who like growth stocks. Growth stocks investors do well when small cap or mid caps go up and they are high growth stocks. But now we see small cap is underperforming and growth is underperforming. Not a good time. Can you confirm that statement? It's a not a good time? Yes. And it has not been a good time for a long time. We can see that from FATY.K. And why I bring that up, if you are used to trade only one kind of stocks, growth stocks, then you may lose out on many other opportunities. Like I explained, I bought many stocks last 10 days. I exited on Thursday, Friday with a nice profit, but you would miss out on them. And that is probably true because this is FFTY, Investors Business Daily, a 50 stock index managed ETF. And let's look at it using weekly daily. Let's see how much it has dropped from the peak. It has dropped a lot. Very clear downtrend in weekly, very clear downtrend in daily, and see how the market we saw recovered somewhat, but FFTY has not recovered. It's languishing at the bottom. The relative performance shows it is underperforming the market. So if you are a pure growth stock investor, you are struggling probably, or you have to be extremely good to make money with this kind of chart of FFTY. Now how much is the decline from the top? We can easily figure that out. As of Friday's close, it's 49.7, let's say 48, 49, let's say about 50% drop. If we actually take the bottom, not Friday's close, if we take the bottom, it's more than 50%. And there is another, or there was another favorite of growth stock investors, that was ARK Innovation Fund, the main one. Let's look at ARKK, languishing at the bottom. There was no recovery at all. Though individual some stocks I bought, they recovered nicely. There was no recovery at all. How much was the drop from the peak? Peak to Friday's close, 70, let's say 70%. That's an even bigger drop than FFY peak to Friday's close. And if we take peak to the low, that was 78, almost 80%. And I'm just doing this live. Interestingly, now I see that right at the very top, a bearish headwind came in FFTY in the weekly chart. When you looked at that, if you had long positions which were doing very well before that, you could book profit in some of them and protect profit in some of them. In whom? In the stocks that are part of ARKK or in ARKK itself, if you had a long position in that. By that, you would save yourself from a decline of almost 80%. That is I'm sure it's devastating for the people who are holding a long position in ARKK till now. What is the chance that after 80% drop it will recover to this level? Anytime soon? I don't think so. Now, growth stocks are not doing well, small caps are not doing well, and I turned bearish. Let's look at some other market signals why I turned bearish. That is from Q Finder, technical breadth, balance between bulls and bears. And see one interesting thing. The weekly balance between bears and bulls in terms of Q signals and setups is still bullish. Actually very bullish all across the board. And there are traders. I was talking to some gentleman from Australia. He was mentioning he looks at weekly signals. If you are swing trading, that is too late, I think, to look at weekly signals. But probably that gentleman is not so much doing swing trading. If you are doing swing trading where holding period is about 5 days to 7 days, then basing your trade entries on weekly period is going to be too late. And this is a live example of that. The weekly is very bullish, but I already turned my bias to bearish side. And if you followed my market roundups and tweets, my bias had been pretty weak. Not every time probably, but pretty accurate, not pretty weak. My bias had been proven to be very accurate over time. So weekly is bullish, but on Friday, and it turned very bearish. Reversal signal very bearish, 95%. Trend continuation also turned bearish, 82%. All signals 67. Strength is very bullish because there were a large number of gap ups. Anything above 10% is significant. We had 14% gap ups, very large, and then 95% reversal signals. The actual number, absolute number of reversal signals is more than the bullish strength signals. So bearish reversal more than bullish strength, that is very bearish. So this pie chart and this pie chart taken together, when we look at the absolute numbers, is a very bearish signal. And now if you look back on the market ETFs, this kind of pattern is actually caught by the red candle high. Now let's find a stock with short setup. Now that's my preferred trading direction. I explained why. How did I now go about finding a short candidate, low risk short candidate with red candle high? In Q Finder, those who have the additional momentum signals, HSA like signals, we could go to the momentum tab. We have this red candle high, green candle low column. Let's flag for that. Let's look for bearish setups and see this second column, next column to red candle high, I sold failure. That's a concept of a stock going up, going to the 50-day moving average and stopping there and tilting down, I sold failure. And remember when I looked at the market ETFs Q entry chart, I showed that many of them, actually all of them, are near the yellow direction line. Some of them are about to go down. One of them I think is down below the tilted down below the yellow direction line. So we could look for not only red candle high, but I see we have 20 isol failure. Let's flag for that. And I don't want the green ones. I want the bearish ones. Let's look at the negative ones. I am left with 27 stocks. You can see from here the count. You can see from here also. I'm left with 27 stocks. See how I looked at the red candle high in market ETFs. I saw something similar to isol failure, but on Q charts in the market ETFs, and I combined these two signals from all my stocks in the universe. So I'm left with 27 stocks. Now I'm going to carry out a fundamental analysis of these stocks because I only want to look at stocks that are fundamentally weak for shorting. I don't want to short a fundamentally strong stock. Sometimes I may do that, but if I have stocks that are fundamentally weak, why not short them? So these are the stocks. I have the stock scorecard. Am I going to look at all of them? Okay, let's look at one star bearish. So they are either overvalued or they are having negative earnings growth. But I am not yet ready to look at the stocks. I want to see how their industries are. Sorry, not I clicked on Finder by mistake. Let's go back. I want to look up their industry from Q Edge because I want to short a stock in a weak industry only. So I see some of the industries, and by the way, they are very well integrated, smoothly operating between the systems. I looked up with one click the industries of those weak fundamental stocks, and I see three of them are very weak in score. One is very weak in acceleration deceleration. So I want to only look at stocks from those industries. I am left with only 5 stocks. Isn't it beautiful? I started with thousands of stocks. I had a pattern in mind. Again, remember the MMM 3M case, how I found it. This is a similar exercise but using Q Finder. I didn't have to run any separate scan. I started with thousands of stocks, looked at those red candle high with isol failure, bearish side, looked at their fundamentals, looked at only weak fundamental stocks, looked up their industry scorecard, focused on only the stocks that are in weak industries and left with 5 stocks. They are all down. And incidentally, today, just now I saw the news that um, a new global health emergency has been declared by World Health Organization. But I didn't know about that when I was carrying out this analysis. You could carry out this analysis in real time on Friday itself. And interestingly, Hilton is one of those stocks. Let's focus on Hilton, HLT. That's the hotel chain. Very nice hotels. Overvalued. Has earnings growth, but that's fine. The earnings growth is due to people starting to travel after the COVID restrictions were lifted. But now we have a global health emergency that I know now. But as of Friday's close, the overbought, overvalued condition already allowed me to short. And now let's look at this stock chart. Let's look at it using the template that has the red candle high also. 3 chart template. And what we see? We see a red candle high. I also looked for isol failure. That's price trying to go above the 50-day moving average and coming down. So it pulled up, hit the 50-day moving average, came down. This is what was my first step, to look for stocks with red candle high, red candle high and isol failure. And in the daily chart, I see now very nicely it is reversing from a trend line resistance. It is also reversing from the yellow direction line. Again, that's a pattern I was focusing on after looking at the market details. I have a bear release signal, very bearish shape candle. Weekly has a trend line resistance. So weak fundamental in terms of valuation, very weak industry, and a very low risk shorting opportunity. And I could find this trade very easily with a pattern in mind. I could of course use the finder to look for the usual trade setups that I do many times in the market rounders, but today I showed another way similar to how I found 3M earlier in another market recap, but this time not using the scans, this time using the finder. I didn't look for a trade setup to start with. By the way, if I go back to the industry now, when I was carrying out the workflow, I was looking at the weak industries only, and let's focus on the industry score. Hotel, resorts and cruise lines. Among the bottom 20% in score, it was very weak due to COVID, tried to go up and sharply tilted down again. On Friday, the industry is down by almost 1.8%, over 2 days 4.5%. That's how you can easily find low risk trading opportunities. Another trade that I shared on the forum, let's look at that, how I identified that. If we go to forum from superiorprofit.co, 360 degrees trade analysis, this is the idea I shared on Friday during market hours. Fuel Cell, FCEL, that was the stock, and you see the workflow was different, but I ended up with a 360 degrees trade where all the signals were, all the dimensions were aligned on the bearish side. The renewable energy equipment services industry was among bottom 20%, and you can see it is in real time. I am doing that analysis as of 1 p.m., about 1 p.m. Eastern Standard Time. So bottom 20% in terms of score, and in this case also bottom 20% in terms of deceleration. The industry was down by 2.2%, significantly down, allowed me to short, and I found this stock Fuel Cell, FCEL, Fuel Cell Energy, doesn't make any money. Earnings per share is negative, overvalued stock, negative earnings growth. So a 3-star shorting candidate. And see, not only the relative score of the industry was weak, in itself 100% of peer stocks for Fuel Cell was down. That was very bearish. Fundamentals allowed me to short with confidence, and in this case it is not a reversal from resistance. In this case it is a breakdown from support. And again, tie it back to what I saw in China market. China market is where Fuel Cell was on Thursday. If China market goes down on Monday, it will give a picture similar to Fuel Cell, and I'll be happy to short. Very similar picture in fact. Of course, here I have also a breakdown from weekly trendline resistance that is giving me further confidence to short, and we have also a bearish flow shown by the tick symbol. So I could short it, and I did short it on Friday. Hilton I have not shorted, I found it afterwards, but if I found out it Hilton on Friday, I would have shorted that as well. I have shorted some other stocks, but I would not discuss stocks that I didn't share earlier. We are anyway at 1 hour point, but before closing, I would like to mention something, some notification. I'll follow up with email. Earlier, I was using the website sagarnandi.com. That was actually a forum, and superiorprofit.co, this website, was redirected to the forum. But now I have organized the Q trading technique systems in superiorprofit.co. So I'm going to discontinue the site sagarnandi.com. Everything will be in superiorprofit.co. That is where you can access everything, be it forum or trading philosophy of products or the learning center. Now this change is not only in terms of the website, that's why this is an important announcement. This is not only a change on the website, this is also changing the servers that is used by all the Q programs. So I will in coming days email the Q users to reinstall the new version which links to the new server, new website server, not the old one. The old one is getting discontinued, so you need to upgrade to the latest version because the old server will be switched off after some time and your queue systems will stop working. Once you install the latest version, but please wait for my email. Once you receive the email, you may download from the usual download page, install the latest version, and it will connect to the new server. And because the server is changed, in this case, unlike usual system upgrades, the DLL files will also change. So not just run the executables, put the files in appropriate folders. Remember to put the DLLs in appropriate folders. And I'll mention those steps in email where the DLL should go to for Q types, for Q global and Q elite. There is another major announcement. You could subscribe to Q systems from sagarnandi.com earlier. Those subscribe buttons are not there because the website is going to be discontinued. Then you could subscribe from the subscribe menu in Superior Profit. But I am going to stop that also. If you click on subscribe, you could scroll down. You could subscribe to all the Q programs, Global Dives. Below you will see Q Elite, all the Q programs. But I'm going to discontinue this page at least for the time being. That is because the subscriptions were driven by PayPal. That was the payment gateway that I was using, but there is some issue with PayPal, so I will stop this subscription page. And not only that, the current active Q subscribers, again I will follow up with email. I will notify that I will cancel the PayPal recurring subscriptions and I will email alternate way to continue using the Q systems. And what is the alternate way? For Q Global and Q Types, that will be getting the programs directly from Metastock. Once again, I'll mention everything in email, but I wanted to give an advance notification that once you receive the email, you need to, in this case, install the latest version because the old servers will be switched off and the Q systems will not work if you are still connected to the old servers. And for the current active subscribers, we need to switch to alternate payment mechanism. I'll mention that also in an email. That is all for today's session. Once again, these live examples that you see on my Twitter page, on the website, and this live YouTube session, you see with how much ease and confidence I am analyzing trades and probably taking at least some of them, if not all of them, and then coming out with sizable profit considering that these are swing trades. That shows few things. One is I am very used to these systems and techniques. And another thing is these systems are very unambiguous. That is why I could develop my confidence on the system. They show that once again, there is no reason not to trade profitably if you follow a disciplined systematic approach. I hope you are doing that. If not today, soon you will start doing that. Thanks a lot once again for joining me. Have a great weekend and trade profitably. Thank you.